Welcome back to our channel, where we break down the most exciting stock stories in the market. Today, we're diving deep into Adobe Incorporated. Let's get ready to explore some incredible numbers and see why Adobe is a stock worth watching. Buckle up, because this ride is going to be both informative and entertaining. First up, let's talk about Adobe's P ratio. Currently, the trailing 12 months P ratio is sitting at 27.74. Now you might be wondering, how does this compare to its historical performance? Over the last 5 years, Adobe's average P ratio was a whopping 39.06. So, it looks like Adobe is trading at a more attractive valuation compared to its past. But wait, there's more. Looking forward, the forward P ratio is even better at 22.86. This forward P tells us that analysts expect Adobe to generate more earnings in the future, making it a potentially great buy right now. Next, we have the PG ratio, which stands at 2.08. For those not in the know, the PG ratio considers the P ratio and the company's expected growth rate. A PG of 1 is considered ideal, so 2.08 suggests that Adobe's price might be a bit high relative to its growth rate. But with a company like Adobe, there's always more to the story. Now, let's peek behind the curtain at insider ownership. Only 0.43% of the shares are held by insiders. While this might seem low, it's pretty common for big tech companies. Insiders might not hold a large chunk, but that doesn't mean they're not committed to driving Adobe forward. Time to dive into profitability. Adobe boasts an impressive return on equity of 32.37%. This means they're making 32 cents for every dollar of equity. Pretty stellar, right? Their return on assets is 17.33%, and return on invested capital is 32.35%. Adobe knows how to squeeze out profits from their investments, that's for sure. Earnings per share or EPS is another highlight, currently at 16.75. And the projected EPS growth for the next 5 years? A solid 13.36%. Over the past decade, Adobe's EPS has grown at a compound annual growth rate of 32.96%. That's what I call a positive trajectory. And it's not just EPS that's been on the rise. Free cash flow per share has also seen a remarkable growth with a CAGR of 22.48% over the last 9 years. Adobe is effectively turning its revenue into real, spendable cash. But don't go looking for dividends, folks. Adobe doesn't pay out dividends. Instead, they reinvest their profits back into the company to fuel future growth. That's a classic growth stock move. Let's talk about margins. Adobe's operating margin is an impressive 34.91%, and their profit margin is 24.11%. These high margins show Adobe's efficiency in generating profit from their operations. Revenue and earnings have also seen a very positive evolution over the last 8 years. However, despite this growth, Adobe's total return over the last 5 years has been lower than that of the Vanguard S&P 500 ETF, VO. When it comes to debt, Adobe keeps things manageable with a debt-to-EBITDA ratio of 0.57 and a debt-to-free cash flow ratio of 0.64. This indicates a healthy balance sheet and efficient debt management. The average price return of Adobe over the last 52 weeks is 7.02%. Not bad, considering the roller coaster ride the market has been on. Now, let's talk market cap. Adobe is a tech giant valued at $204.20 billion. And what do the analysts say? On average, they predict Adobe's stock price will hit $608.60 in the next 12 months, representing a potential upside of 30.9% from the current price of $464.60. However, my fair value estimate for Adobe is $443.28, which is below the current price and analysts' predictions. So, there you have it. Adobe Incorporated is a powerhouse with strong profitability, solid growth prospects, and a bright future ahead. Whether you're an investor or just a tech enthusiast, Adobe is a company worth keeping on your radar. If you enjoyed this breakdown, smash that like button, subscribe for more market insights, And let us know in the comments what stock you want us to dive into next.